Hey everyone, welcome back to the channel. Today we're diving into a powerful stock valuation metric that goes beyond the basics, the PEGY ratio. If you've ever wondered whether a stock is undervalued, fairly valued, or overpriced when factoring in both growth and dividends, this video is for you. And to make it practical, we'll break it down with a real-world example. JM Financial Limited. The PEGY ratio stands for price to earnings to growth plus yield. It's a variation of the PEG ratio, which compares a company's PE multiple to its earnings growth. The formula is pretty simple. PEGY equals PE ratio, earnings growth rate plus dividend yield. The PE ratio tells us how much investors are paying for each rupee of earnings. The earnings growth rate reflects how fast profits are expected to rise, and the dividend yield adds shareholder returns into the mix. A PEGY ratio around 1 usually suggests fair value. Less than 1, it may be undervalued. More than 1, it might be overvalued. Let's take JM Financial Limited, ticker JM Financial, as an example. Here's the data we'll use. PE ratio, 16, 9x. Dividend yield, 2.8%. Expected earnings growth, we'll assume 10% per year. Now let's plug the numbers into the formula. PEGY equals 16.9, 10 plus 2.8. PEGY equals 16.9, 12.8, 1.32. So, JM Financial's PEGY ratio is about 1.3. What does that mean? A PEGY of 1.3 is slightly above 1. This suggests the stock might be a bit overvalued compared to its growth and dividend returns. But here's the catch. If JM Financial grows faster than our 10% assumption, the PEGY drops closer to 1, making it fairly valued. So the PEGY ratio is a tool to combine valuation, growth, and dividends into one easy-to-read number. Let's do a quick sensitivity check. At 5% growth, PEGY 1.7, more overvalued. At 10% growth, PEGY 1.3, slightly overvalued. At 15% growth, PEGY 1.0, fairly valued. At 20% growth, PEGY 0.8, undervalued, so the PEGY ratio shows how much the valuation depends on actual growth rates. To wrap it up, PEGY is a smart upgrade to the PEG ratio because it also considers dividends. For JM Financial, with a PEGY of ~1.3, the stock looks slightly expensive unless growth picks up. Always remember, PEGY is just one tool. Use it along with fundamentals, industry outlook, and financial health before making investment decisions. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more investing insights. Drop a comment below. Should we do PEGY analysis for other Indian stocks like Exide, Force Motors, or Power Grid next? Thanks for watching, and I'll see you in the next video.